Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about cryptocurrency. What is the worst case scenario? If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You can find a link to that down in the description below. You will get access to this website right here that you often see me use, as well as a lot of other things. We'll talk more about that at the end of the video. Let's go ahead and jump in. So, as of November 16th, 2022, the entire cryptocurrency asset class is coming in at around 783 billion. And this video series is something that we've been following throughout this year. And we talk about what is the worst case scenario. I would say that it would be irresponsible to assume that the worst case scenario that I outline is the only scenario that you should consider. What I would say is that it's just my worst case scenario. Oftentimes, when we talk about this, I will see responses and comments saying, well, the worst case scenario is that cryptocurrency goes to zero. And while I do fully understand that, the purpose of this video is to talk about a worst case scenario that I consider realistic. And I do not consider that scenario realistic. I will admit that Bitcoin and the entire asset class continue to remain under a lot of pressure from a lot of macro headwinds and just a lot of cyclical indicators, but these will not always exist, and I do think we will eventually go back into a bull market. With that said, it is prudent to be realistic and to be as objective as we possibly can. Remember, being misplaced optimism gets you nowhere, okay? To just say, I want to be optimistic rather than be pessimistic, it gets you nowhere in a bear market. And if you have been optimistic the entire way down, calling the bottom the entire way down, where has that gotten you? What has it achieved? It's better to just simply be realistic about things than to spend so much time trying to will things to occur when there are pieces of evidence to suggest that the asset class remains under pressure. Now, what we're going to do in this video is we're first going to remind ourselves of what we've talked about in the past and then provide an update as to where we are today. Okay? We're going to look at a few different indicators. Now, we started talking about this a lot back in February when we said the crypto ball, understanding the risks with cryptocurrency. And the reason we made this video was because we could draw the comparisons between the crypto bull in 2022 and the dot-com bull back in the early 2000s. There are a lot of similarities in them. In fact, a lot of cryptocurrency businesses took over the advertising slots in the Super Bowl this year, just like a lot of the dot-com companies did it a couple decades ago. And in the same way, both times that occurred, it would not have been a good time to get into that asset class because the asset class was in a bear market. And it took a lot of those people coming in and a lot of these people put in their money near the top, right? Near the top in both scenarios, and it ended up acting as some level of exit liquidity for early investors in the space. Now, despite the fact that despite the fact that the dot-com bubble burst and the entire asset class went down about 84% back then, today, dot-com stocks kind of rule the world, if you think about it. We're all able to watch this video, make this video. I'm able to do all this because we have access to the internet, because there's all these dot-com companies that give us amazing tools to use. So while the cryptocurrency asset class today arguably looks somewhat similar to what the dot-com bubble looked like back in the early 2000s, I will say that within 20 years, our lives will likely be integrated into cryptocurrency so much that we might not even think about it that much anymore. Now, with that said, there are some caveats, and I want to be clear about this right now. There are a lot of altcoins that simply will not see new all-time highs, just like there were a lot of tech stocks back in the early 2000s that never recovered. This is just simply a fact of life. Not everything will recover, but the juggernauts that rule the world today, more or less, were created 20 years ago. In the same way, if we were to fast forward 20 years, I think a lot of the projects that will really be very large and integrated into society are currently being worked on today within the cryptocurrency asset class. But to assume that every single altcoin will make it would in fact be a mistake. We don't have to go look at the dot-com bubble to figure that out. We can simply go look at cryptocurrency's own historical context. For instance, back in 2013, some of the top coins, of course, was Bitcoin. But Litecoin, Namecoin, Purecoin, Novacoin, Feathercoin, all the way down. Who doesn't want to go back to a simpler time when BBQ coin came in at number 11? If we fast forward to the next bull market back in 2017, you can see that another class of cryptocurrencies were there. Some were the same, some were different. You had Ethereum, you had Bitcoin Cash, XRP, Litecoin, Cardano, IOTA, Dash, and so on and so forth. And then this most recent cycle, while there are some familiar faces, there's also some new ones that popped up. There's Binance Coin, Solana, Polkadot, and so on and so forth. So as we continue to sort of march forward in time, we understand that a lot of altcoins just simply will not make it. That doesn't mean that none of them will. It just means you have to be very picky about what you choose. And what you might notice throughout the years is that Bitcoin is number one. And that has just simply not changed. No matter how much talk there has of the flippening and all this other stuff, it just simply has not changed. Okay? So I think we need to remember that as we continue to push forward in time too. Now, in this video back in February, one of the things I would like to draw your attention to is the fact that this article, which was put out not at the bottom, right? It was put out November 9th, 2000. And if you go look at November 9th, 2000, it was actually somewhere over here. So it wasn't even at the bottom yet. But what you may notice is that within this video, the asset class shows that the combined market values of these .com stocks peaked at 2.948 trillion. What's interesting about that is that crypto also peaked at right around that $3 trillion mark, that 2.9 to $3 trillion level. And the NASDAQ back then fell approximately 84% or so. If the total cryptocurrency market cap were to fall 84%, so if we were to just take an 84% move to the downside from here, you're still looking at the asset class going below 500 billion. Now remember, when we first started talking about this, the asset class was a lot higher. Okay, and I don't remember, I think it was 1.8, Bitcoin was at 41K, 42K or so. And the entire asset class, I believe, was around 1.82, so 1.82 to 1.83 trillion. As of today, we've already seen a 50% haircut from that level, and that level had already seen, like a 40% haircut. So far, taking a realistic view of the market rather than saying, rather than just being blindly optimistic has been better, right? It's better to be realistic than to have misplaced optimism based on nothing, all right? So, could the asset class go down 84%, which would put it at around that $400 to $500 billion level? This is a possibility. And again, this includes stablecoins. I have seen some comments and that they are somewhat fair that we should look at this without stablecoins. Maybe we'll look at that in the next video we do on this. But right now, if you just take it 84% down, that puts the asset class at around 400 to 500 billion. Now, I will remind you that if you go look at the total cryptocurrency market cap trend line, you can see that the lower bound down here is around that 400 to 500 billion milestone. Okay, so this is something that I think is somewhat important. Right now, it's coming in just over the lower band. It's coming in just over 500 billion. But it doesn't mean that you can't. It doesn't mean that you can't go slightly below it. It doesn't mean that you can't just go down here and ride this line for a while. It also means maybe we should not include stablecoins in the analysis. But regardless, that is somewhat plausible, simply based on what we saw occur during the .com bubble, an 83 to 84% drawdown within the entire asset class. So this is where it started, right? And we talked about these risks. We followed it up in a few months later. I believe this was maybe 6 months, or this was 9 months ago. We talked about the worst case scenario for Bitcoin and coming all the way back down to these sub 20K levels. Right? We talked about this back then and how there were a lot of cyclical indicators suggesting we needed to go much further down. And listen, I've been talking about the altcoin reckoning all year, and people constantly wonder, well, when is the altcoin reckoning going to occur? Look, guys, I mean, when I made this video, Ethereum was at 2,400, Link was at 15, ADA was over $1, DOT was at $17. If we go look at this video, again, Ethereum was at 28.55. Okay, it's been happening all year, right? It's just been simply happening all year. I don't think it's over yet either. I will be clear. I don't think it's over yet. I still think we have a little ways to go. But with all that said, we've covered this when Bitcoin was at 42K and then at 34, 35K. And then we also covered this worst case scenario for the cryptocurrency bottom, again, 6 months ago when Bitcoin was at 29K. And then, of course, just a couple months ago or so when we were over 21K, and talking about what, again, is the worst case scenario. Now, what I'd like to draw your attention to is how the NASDAQ.com bubble burst. Okay? And again, you can see that it dropped about 83 to 84% from the all-time high. So far, the cryptocurrency asset class is only down about 73 to 74% from the all-time high. So could it in fact go lower? If it were to go sub 500 billion, you're still talking about a 40 to 50% correction from here, right? But how do we get to that level is the important thing to consider. Now, if you guys have followed this channel this year, we have been calling for lower lows, right? We simply have. And while we spent many months testing that recently, eventually the asset class, Bitcoin, put in a lower low. Even the total asset class put in a lower low. If you look here, the low from June was 762 billion. This most recent wick went down to 736 billion. So we already have put in a lower low on the total cryptocurrency asset class as well. So again, that misplaced optimism by a lot of people that kept calling June the bottom was just simply that. It was misplaced optimism. It was not what I would consider to be a very realistic scenario. While there was always a chance it could have been the bottom, I have maintained at length that the time to start talking about the bottom is upon the next lower low after the June low. And we don't know if that's even fully played out yet, okay? So to look at this in a potentially different way, what you may notice is that in the dot-com crash, we had a series of 3 fairly extensive rallies. The first one came fairly early on, and the asset class rallied about 40%. Now, if you go look at total crypto market cap, you'll also notice that fairly early on, we had a rally of about 40%. Okay, about a 40% rally. Furthermore, after this catastrophic drop within the tech stock bubble, we had yet another rally. This time, it took us up about 50%, a 50% rally. If you continue on, you will notice that total crypto market cap rallied again about 50%, 55% or so. So you might say that there at least are some similarities between what happened over here in 2000 and 2001 and what's happened so far in 2022. Furthermore, the NASDAQ had a third rally off the bottom to the tune of about 60%. There were also some smaller rallies in here as well. But 3 main rallies, 1, 2, and 3. 3 main rallies, each one more aggressive than the one that preceded it. And each one, the bottom was simply not in, right? In each one of these, the bottom was not in. And in fact, after this low that a lot of people would have probably thought was the bottom, the asset class still managed to go down another 28% before the final bottom was in. Okay? Where do we stand today? Well, arguably, we've already had the 40% move and the 50% move. This one was even over 50%, so maybe it's a combination. I don't really know. What would it look like if it were to play out like this? Well, this is the worst case scenario. I'm not saying that this has to happen. But what I'm going to be looking for, and I want to be completely honest, right? What I'm going to be looking for is there are a lot of cyclical indicators for Bitcoin that are probably coming up pretty soon, right? We had major bottoms in the cryptocurrency asset class beginning of 2015, so basically the end of 2014, but it bled into 2015. We had a major bottom at the end of 2018. We're potentially looking at another major bottom in crypto at the end of 2022 or early 2023. This would correspond to what historically would be a major bottom. And I would contend that it could be the market cycle bottom. And I don't put that out lightly, right? I don't put these words out lightly. I have refused to call anything this year the bottom. At the beginning of this year, I told you that anyone who spends the entire 2022 year trying to call the bottom, they're likely going to make a fool of themselves. Because in bear markets, we tend to just go lower as time goes on. And trying to call the bottom at 33K and 25K and 17 and a half, where has it gotten you, right? It's just simply misplaced optimism where not only do you need price-based capitulation, you also need time-based capitulation, right? A time-based capitulation is needed as well. And oftentimes in crypto, that looks like at least a year of a bear market. In 2013, it took more than a year. It took like 14 months before the bottom was actually in. So this is something that we should consider. Now, an 84% correction from crypto's all-time high over here would put the asset class again around less, it would put it less than 500 billion. I would put forth this idea. If the asset class were to completely crumble and go down from this level another 40 to 50% over the coming weeks, then you could clearly make the case that the bottom is in, right? I think you could make the case that the bottom is in for crypto if we see the continuation of the altcoin reckoning, if that occurs. What if, instead of going all the way down, we see a marginally lower price? So let's take the NASDAQ, for example, and take this low to the next low. It was only about an 18% drop. So if this prior low from June, if we only go, say, 18% below that, that would put the asset class at around 626 billion or so. Now think about this. If the asset class drops another 18% from here, it would put it at around 600 billion, just over 600 billion. There will likely be some cyclical indicators that say the bottom is in as a function of time. That's right, as a function of time. Now, not all of the indicators might say the bottom is in because they might say, well, technically it's not down as much as we know that it could go down. That's still only a 79% correction. We do know the NASDAQ dropped 84% in its own bubble. Bitcoin historically drops. First bear market was 94%. Second one was 87. Third one was 84. So far, this bear market, I believe Bitcoin is down 77. So again, you could argue diminishing losses, but that might not also come true, right? I mean, 3 points doesn't necessarily make a trend that you can put a ton of weight into, but it is something to at least consider. So I would put forth the worst case scenario for me is the entire asset class going just below that, somewhere in that $400 to $500 billion range. Now listen, we can get into the nuances of this in a future video where maybe we exclude stablecoins and just look at the asset class as a whole. But going sub 500 billion would be akin to what the dot-com bubble did. It would be akin to what the dot-com bubble did. I would honestly prefer for us to just rip the Band-Aid off and get it over with. Okay? This is what I would prefer. And I've said this all year. Let's just rip the Band-Aid off and get it over with. But what if that doesn't happen? Okay, we need to be prepared for this potential scenario. And that scenario is if Bitcoin and the entire asset class were to drop, say, another 20% from this level, but not go down that full extension from the all-time high that we know that it can, if it drops down 18% from here and then gets that 60% rally back up to 1 trillion, that you could make the case is this rally here. 40%, 50%, 60%. That's what I'm watching, okay? So suppose we get some type of capitulation or lower low at the end of the year, but it's not really as far down as it needs to be. Perhaps you see a lot of people front run this, and we still could put in one final low after that. It's not something that has to happen. I want to be clear. And in fact, if the asset class just goes ahead and capitulates down, then we could just get it over with and not have to worry about another rally. I think what you need to think about though is when the asset class, well, let's assume like if and when the asset class sees that move to around that $600 billion level, I think we should watch closely to see what happens. You're getting into some deep value territory right here. Let's be honest, right? I think you're getting into some deep value territory if that happens, regardless of whether it's the bottom, in my opinion, not financial advice. But if this occurs, you will likely see deep value obtained within the asset class. If the crypto OG investors, right, like the people who've been on it a long time, say, all right, well, this is typically the time we see a bottom. If we get some type of crazy rally off this level, I think some red flags need to go up, okay? Because we could easily come back down and retest it at the very least. Remember, historical bottoms, we do tend to retest. Okay, it happened last cycle, happened the cycle before that as well. Okay, you typically come back down and retest it. In this case, the worst case scenario, if we don't go all the way down, could be a move back up. It could be retesting the bottom, or it could be a slightly lower low, and then the bottom is in, just like the NASDAQ did in the .com crash. This is what I'm watching. I just want to be completely open and say, look, from a cyclical perspective, we are getting relatively close to what we would normally consider the bottom. I think whether it's the bottom or not will depend on how low it goes. If it goes a lot lower, if it's more than a 20% correction from here, then I think we could start to make the case the bottom's done. If it's not, then I still think we need to be sort of on our toes and assuming that it could still continue to take a while to play out. Again, this is the worst case scenario. I understand that it might not play out. Personally, I would like to just see one more low and that's it, and be done with it, right? Just be done with it at that point. But I think we owe it to ourselves to follow through on this series that we've been talking about since the beginning of the year on what is the worst case scenario. So we have gotten pretty close. Total is down 74%. If it goes down 84%, I think you have a really good case. It just depends on when that occurs. Does it occur this year? Does it occur next year? I don't know. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. We also do have the sale on Into the Cryptoverse Premium at intothecryptoverse.com. We put out 3 premium videos per week. We also have a newsletter. We have trading view indicators. We have the website with on-chain statistics, derivatives data, social statistics, ROI data, logarithmic regression stuff, etc. We also have stocks, precious metals, Forex, goes on and on. Make sure you check that out. Lock in the low rate through the end of November. Thank you guys for tuning in. Subscribe, give the video a thumbs up. I'll see you next time. Bye.